What up? Welcome to another episode. Today we're talking about hyperchange in the tobacco industry and specifically a controversial startup known as JUUL. And so just a week ago, or on December 20th, we got news that Altria, which is a massive old school US tobacco company, they were formerly called Philip Morris. They own brands like Marlboro and Parliament, and they made a huge, massive $12.6 billion investment into JUUL, the new vaping startup based in San Francisco. This valued JUUL at $38 billion as a company, and this meant that Altria now owns 35% of JUUL's outstanding equity, and so this made a huge splash in the investing community. I mean, this is one of the largest investments we've ever seen big tobacco make into a vaping company. And so I wanted to make an episode. A ton of you have asked me about what my thoughts are on this, about, the financial terms of the deal, why Altria did it, all the numbers. And then at the end, we'll touch on why this is such a controversial deal and why, morally and ethically, I'm sort of not really a fan of either of these companies or what this is going to mean for the future of the vaping and e-cigarette industry. Anyway, let's get into it. So we all know smoking cigarettes is incredibly bad for your health. I mean, this has been proven time and time again, but people do it and they're addicted. And so this has been given rise in recent years, maybe a decade or two ago, vaping started being a thing. And forgive me, this is just my bare bones history lesson. But anyway, vaping has been a thing. And just anecdotally as a consumer, I feel like vaping has always been sort of weird. Like, it's never really caught on. It's never been mainstream. It's always been a fringe thing. It's never been even remotely as popular as smoking cigarettes, as something that I've observed. And then more recently, there's been this trend of huge, really big handheld, massive vapes that exude a huge amount of smoke out, and people are smoking those, and that's sort of starting to cut into the e-cigarette market, and that has been the status quo of vapes and cigarettes. Then JUUL came along, and JUUL is an incredibly new product. Don't get fooled by its huge valuation or massive growth or popularity. I mean, this is an incredibly new company and phenomenon. JUUL actually only launched its product in 2015 into the market. 3 years ago is when JUUL first started being sold for sale, and now they are everywhere. I mean, the growth of JUUL has just been astronomical. If you take a look at the Google trends of JUUL, it actually surpassed Marlboro about a year ago, and almost every other cigarette brand I Googled wasn't even close to JUUL in terms of brand recognition. Based in San Francisco, it was actually spun out of Pax Labs, which is now a marijuana vaping company, in 2017, but they sort of share some sort of R&D or technology, I guess, and it's really known as the Apple of vapes. This is what is so interesting about JUUL. This is why Altria made the investment. This is why they are hyper-changing their own industry. What JUUL has really done is they've made vaping cool, they made it super sleek, they made it super easy, they have just streamlined the entire process, removed every single pain point. The products are they're way tinier than most vapes that you would see. They're super easy to charge, they plug in magnetically. They have a razor blade model where they sell their JUUL, which is the actual device, and then you get your little flavor pods, which actually has the tobacco that you just click in there super easily. Clean looking, minimalist design product that would look honestly not out of place if you had your JUUL, your Apple, and your Tesla. Those brand sort of design touches are all very similar, which is why JUUL is such a fascinating company, because under the hood of this sleek, cool, sexy product is a really, really problematic nicotine addiction device. And because it's so easy to use, it's so simple, it looks so cool, it's so portable, and it's so much better than the vape status quo, it's actually crushed in market share. JUUL has 72% of the vape market share as of September 2018. That's up from 25% a year ago. So the pace of JUUL just dominating the entire vaping market cannot be understated. And they have 70% gross margins, which is right about in line with Altria. I mean, this company is probably insanely profitable. On the conference call, Altria mentioned that JUUL was hitting and beating all of their targets when they were tracking the company, and it kept growing faster and faster than they expected. And so then eventually, they've been negotiating for this for months and months and months. They pulled the trigger and got the deal done. So before we get into the terms of the deal, I want to talk a little bit about Altria's business and why, from a financial strategic perspective, this makes so much sense. Their revenue is, pretty flat. This is what you'd expect from a cigarette maker. They've been offsetting volume declines in cigarettes with price hikes. And so the company, as revenue line, has stayed pretty flat actually since 2009, almost hasn't increased at all, from 24 to 25 billion. But if we take a zoom in at revenue there, you can see just exactly how flat it is. I mean, it literally doesn't look like it's moving at all. This is a mature standstill business. But if we go to operating income, the company's earnings have almost doubled in the same period, as they've sort of cut costs, got more profitable, boosted margins, etc. So Altria has been growing earnings pretty impressively. And another thing they've been doing which I think is just a good finance lesson overall, is what do you do if you're a cigarette company that's super mature, that's spitting out a ton of cash, that wants to, preserve shareholder value, but doesn't have necessarily growth initiatives to invest in? You're buying back stock. And that is what we see with Altria. They've continually bought back a little bit of stock each year. They pay a really good dividend as well. And so that's sort of what they're known for. My grandma owns Altria stock. I told her it's lame and morally she shouldn't, but she does. And she loves it because they pay a dividend. It always goes up and they're buying back shares. They're great to shareholders. I think a ton of retirees own it. That's kind of the demographic, not exactly hyperchange. Anyway, let's talk about why they bought JUUL. So you have this stagnating company, Altria, and they are now teaming up with a mega $13 billion investment into the trendiest, sexiest vape startup in Silicon Valley, JUUL. It makes perfect sense when you look under the hood at the numbers. So here are the terms of the deal. Altria is investing $12.8 billion for 35%, values JUUL at $38 billion. JUUL remains fully independent as part of the acquisition. They're going to leverage Altria's sales organization and 230,000 retail locations that they have in their distribution network to start selling JUUL. Additionally, Altria can't sell or transfer its JUUL stock for 6 years, and JUUL is going to be the only vape brand that Altria has as long as they own and are invested in the company. So I did some Googling and tried to find what JUUL's financials would look like for the past couple years. There's actually an Axios article that does a great job explaining this, and I've charted those numbers based on what I could find from that and what I Googled at CNBC. And so this is, per my estimate, best estimate, these are JUUL's financials. We go from revenue of 60 million to 245 million to 1.5 billion this year. In 2 years, this company has gone from 60 million to 1.5 billion. I mean, I cannot this is insane amounts of growth. And this is actually enough revenue and enough growth to where it could impact Altria's financials right away, immediately. If they bought JUUL, you would already start seeing it show up in the financials. And we're going to get more into that in a second. But the other tidbit I want to mention is I think JUUL is incredibly profitable already. In the Axios article I found, they were projecting EBITDA in 2018 of 250 million or so. And that was when they were expecting revenue of 900 million. Now they've upped their revenue estimate to 1.5 billion. I bet their EBIT estimate, in my estimation, JUUL could be earning about 300, 400, 500 million dollars in profit in 2018. So that would already be equivalent to 5% of Altria's profit and, about 5% of its revenue as well. And so JUUL is already 5% as big as Altria, even though they've only been around for 2 years or 3 years, literally exploded overnight. And so if we overlay the JUUL impact and what it could be on Altria's revenue, just to give you a taste, this is what I'm expecting for 2018. And this is just Altria. Now, if we add in JUUL's revenue that I charted in the other slide, you can see that because it's 1.5 billion, we're already starting to see Altria go from a shrinking company to now a growing company just based on that JUUL impact. And I went ahead and forecasted Altria's financials through 2020, and I actually accelerated the decline in their core business pretty aggressively. As you can see, it starts falling off because I just wanted to assume they're going to push on vapes. A lot less people are going to be smoking. I want to be conservative. And I estimated JUUL's revenue of $3 billion in 2019, $5 billion in 2020, which I think they could crush both those numbers. And you can see that this changes everything for Altria. They go from this shrinking, boring tobacco company to now a growth stock. And a growth vaping stock because of JUUL, and it's going to become a pretty meaningful and material part of their business in the near future. And so that is why Altria is buying JUUL. This is a way for the company to be growing again, and this is why they were so excited on their investor call and their press release. Altria is like, look, now we can be a growth company again. And on one side, from a financial perspective, investors, actually the stock went down on this news, which is crazy to me, but investors, are like, oh my God, we're making more money, we're going to grow again, this is good. But on the flip side, we had the JUUL controversy. Altria did not buy JUUL to not expand it. They're valuing this company at $38 billion because they want it to grow like crazy. That means more marketing. That means they want to sell a lot more JUULs. That means they want to sell a lot more pods. JUUL is marketed as a product to help people quit smoking. It's supposed to be a product that cigarette smokers use when they want to stop smoking, and this helps them because it's easier, it's cleaner, it's healthier, etc. But that's not what's happening with JUUL. The problem is teenagers are using it, young people are using it. It's getting people who never smoked before addicted to nicotine. It's not doing what it's like. I would argue 90% of JUUL use is not replacing cigarettes. It's actually creating new nicotine addicts. It's not, replacing cigarettes for someone who already is addicted. And that's just anecdotal. That's my guess. You can Google it and see what you want. But there's articles everywhere about how many teens are smoking JUULs, about how this is a massively rising phenomenon. We have no idea what the health risks are because it's so new. I mean, this is a total problem. And I think JUUL has already become rampant in schools. It's already like something that parents, teachers are worried about, and they should be. And this is about to get so much worse. Now we have the lobbying power, the legal power, the marketing power, the budget. all behind big tobacco, now behind JUUL. And so we are going to see JUUL get a lot bigger, go international, get cheaper maybe, get step on the gas in marketing. Like, these are all things that are going to make it more widespread. The economic incentive is there for Altria to sell as many vapes as possible, to get as many people using the JUUL as possible. I mean, this is scary stuff. And so I'm personally, this is why morally, financially, I wanted to lay out the terms of the deal for you guys and show you why they did this, what this means, how JUUL's like an amazing growth company. But on the flip side, I would not invest in Altria. I would not invest in JUUL, even if I thought it was a good investment, just because that's not a future I want to live in. My rule is you invest in companies that are building the future you want to live in. That's not a future I want to live in. And I think that could backfire. I think we could see regulation from the FDA saying you can't, like that will limit the expansion of JUUL. I think we could just see more education that stops people using JUULs. I don't know, but I think this could backfire. Or it couldn't, or they might just grow JUUL into a $50 billion company and print billions and billions of cash and get millions of people addicted to nicotine just because of this. That's probably what will happen. Anyway, so that's my wrap up. An incredibly controversial deal, but this is the biggest move we've seen for big tobacco to transform itself into something that is more relevant for the future and for younger people. And the scary and the sad thing is it is working, and this is real. Anyway, this is Hyperchange. Would love to know what you think in the comments below. Also, huge shout out to all our Patreon producers, supporters watching the show. Thank you so much. Anyway, this is Hyperchange. I'll see you guys next time.